I ask you two things. What's your best trade? What's your worst trade? Let's start with your worst trade. Worst trade ever.
My worst trade ever, and this is a good one. I bet you'd appreciate this one. My worst trade ever stemmed from buying a whole lot of volatility in Ford Motor Company.
Right.
The brokers, and this is when I was a market maker, as a professional trader. The big firms came in and, they started selling volatility.
Right.
And there was a spin-off happening. I don't know if you remember this. This was, I think, 2001, if I'm not mistaken.
Vistion? Lear?
It was after Vistion.
Okay.
They spun off $20 of cash. This is when Ford is about $46 a share.
Yeah, I remember that.
And you had the choice of either, $20 of cash, about $20 worth of new shares,
right?
Or a combination of the two. It's very complicated.
Yeah.
Intentionally. Yes. Yeah. No kidding. And so, the brokers came in and they kept selling volatility, and I just kept buying it. And I'm looking at, the historical volatility. I'm looking at the implied volatility. I'm like, holy cow. I mean, this is as cheap as it gets.
Right.
And the day that the deal went through, where the shares were spun, or where the cash was spun off, volatility went up, I don't know, 5 points or something. I forget exactly what it was. And the rest of the pit as well. I mean, we're all in the same boat.
Right.
All got creamed on our long volatility. Now, go figure that one, right?
Yeah. Well, so explain, why did that happen? Because you were right position, but how'd you lose?
Right. Well, this is, like I said, I mean, I learned from the black and the blue. This is a lesson that really helped me intellectually as a trader,
Yeah.
It was because, and this is something that pros get fooled by all the time too, because it's kind of weird.
Yeah.
Kind of how the math works out as to the valuation of the options themselves.
Right.
Even though the volatility went up and I was long volatility, I still lost money. And basically what it comes down to is the fact that there's no volatility on the cash.
Right.
Right. So yeah, it was if I didn't lose so much money, it would have been a great experience.
Well, but a very interesting, education in knowing that, next time there was that type of cash event and you knew it was coming, you wouldn't even be playing, I'm sure.
Right. And, again, just like, of the many things I learned as a trader, I won't get fooled again, and I'm more equipped and better prepared, How
about your best trade? Again, I'm sure you don't really swing for the fences, so to speak, but, what would you say makes you a good trader, and what makes you, continue to, be consistent as a trader, if not your best trade? Give us an idea of how you look to make money in the markets.
Well, certainly, as far as you know this as well as anybody. I mean, you have to be disciplined,
yeah.
And there are surprise things that happen time to time. And, I don't know exactly what my best trade was. Probably what it was, some trade as a market maker where I was long a lot of gamma and there was a surprise takeover or a surprise, somebody's cooking the books and there's a big move and I made a bunch of windfall money,
Yeah.
And, there's a lesson in that too, really. And that is, that's not the best way to make money.
Right.
I mean, hey man, I'm glad it happened,
Right.
But the lesson really is discipline.
Yeah.
You've got to watch your risk, and you've got to try and eke out a little bit every day. You're not going to buy the low every day. You're not going to sell the high every day. That's not the business that we're in.
Right.
We're in capturing some discrepancies and moving on to the next trade. And like you said before, watching your risk.
I agree.